Digital assets are treated as general property by the IRS. What that means is that usually when you buy or sell a digital asset, you're into the capital gain structure of taxation, meaning that you have a capital gain or a loss based on the sale price of the asset minus the purchase price or the basis of the asset. There's also other implications if you're using digital assets for other activities such as earning, or you're doing some sort of mining or staking or things like that. A lot of that is treated just generally as income producing activities, but the general rule here is that crypto is property. So it depends on what kind of activity. If you're talking about sales of digital assets or cryptocurrencies, those are going to be reported as capital gains and losses on your Schedule D, which are going to flow from Form 8949 on your tax return. That's the form where you report all sorts of other transactions like stock transactions or real estate transactions. And you do things like you take the purchase price off of the proceeds to determine the gain or loss. There's other reporting requirements for other activities. For example, mining. Mining might be either self-employment income reported on Schedule C or other income reported on Schedule 1. The same could be said for staking or other types of earning. If you're earning interest on your crypto, generally that's going to be reported on Schedule B, where other types of interest is reported. So there's not really one answer. It really depends on what you're using the crypto for and how you're earning from it. Crypto can be reported on a number of places on anyone's tax return. Well, this is kind of a big question because there's not a whole lot of regulations out there specifically pertaining to crypto assets. So, the bigger question is how they're going to attack the crypto economy as a whole. Right now, from a taxation standpoint, we're kind of applying a lot of the old knowledge, a lot of the old tax concepts to crypto, which, we think makes sense given how people use crypto to earn, how they trade it, and things like that. But there's not a whole lot out there specifically for crypto. The IRS has tried to kind of piece some of this together through notices and memorandums and things like that. But the big thing is that there hasn't been any sort of sweeping policy changes that apply just to crypto and tell us how to calculate taxes on it. We're still kind of stuck in the old world system. I would say far and away that the biggest issue that investors come to us for is complexity and volume. The nature of crypto is that it's freely transferable. You could buy Bitcoin on an exchange, transfer it to a cold wallet, wait for some time, and then transfer it to another exchange and sell it. We've got to be able to go back and figure out what exactly happened to that specific asset in order to report it on your tax return. And that's incredibly hard to do if you're not keeping up with it or using some sort of software. The other thing is volume-based. A lot of these exchanges, these DeFi platforms, at the end of the day, it's the front end is just kind of big bright buttons on a web page somewhere. And when you start clicking them, you don't realize that you're having all these transactions. So it's not really that uncommon for someone to look at their wallet history and determine that they've got 10,000 or 100,000 transactions that they didn't even know that they were doing, and now that they have to reconcile that. So primarily that's what it is, complexity and volume based. And then the other thing I would say would be DeFi, because DeFi is kind of a buzzword that doesn't necessarily really mean anything, but it's a collection of different activities that could be taxed in different ways. And so we really have to kind of drill down on what the protocol is doing, how it's interacting with, how the client's interacting with it, and what the earning potential is, and kind of classify those transactions according to general tax principles. So those are kind of the two areas where most people find us.